Everyone, it's Mike again, and I'd like to share a story with you of how I was eyewitnessing a market manipulation while I was at the firm, trading for a firm, and it involved two traders, not on my desk or at the desk where I was trading. It was a different desk with commodities, so they were trading like crude oil, for example, and RBOB, gas oil, and so on. And it happened on crude oil. The thing was that there was a trader who was trading heavily crude oil. His main or the priority of the trading was crude oil. So he opened a position it was on an outright, and it was about 200 contracts. So he was hiding obviously the order with an iceberg, which means that he put there a limit of 10 contracts that would appear on ladder or on a depth of market dome. So anyone who was trading that crude oil that day, it was on a European session around 9 a.m. so it was an open of the European session, so it would appear like 10 contracts were on it was ask size because he was selling, and every time it got filled, these 10 contracts, 10 additional contracts would appear until the like 200 contracts or something. I don't really remember the exact size of his order, but it was like around 200 contracts. And so obviously if it was just a limit order or market order, it would go much differently because people would see the market, the order size. This way they couldn't, but an experienced trader who is watching the depth of market, he would see that every time somebody put a bid, his offer or his order would just eat it, and it would go around for a couple of minutes until he got filled, and then the market went a bit lower. The problem was that he wasn't able, as I recall, to close his order that easily, and he has other guy just sitting next to him, to buy whatever he had, so he could close the order, and it went on and on like that. So it was they were manipulating the orders, so the market went in a range, a couple of ticks, then they were spoofing, which means they would put some order, when the market was closer to their order they would just delete the order, so there was a lot of manipulation on the desk. And the problem is that firms like that, when they have big money in the market, they can afford to trade heavily, so market manipulation took place not often but from time to time. And then what happened was that because of such trading of those two guys, those two traders, they got caught by the officials at the exchange, and the company got a fine of $500,000, so $500,000, and those two traders ended up with a fine. I mean, the company gave them a fine, $50,000 each, plus they got fired immediately. So there was so that's a story that I wanted to tell you. And there is another story that I wanted to tell you, and the reality of a trading floor. We had an internal chat between us. There were, in the country like where I live in Poland, there were 5 offices there are still 5 offices or 5 trading floors in Poland, and we had an internal chat, so we could contact other offices or other traders on different trading floors of our firm, and share our insights, not like what we think would happen next in the market and so on. And there was one guy who was saying it not in a way like, I believe the market could go up based on my analysis, whether it was technical or fundamental, it doesn't matter. He said, or he shared his view totally differently, and it was like, we have to buy. It was a Bund market, German Bund, 10-year Bund, on Xetra exchange in Frankfurt. So it was like, let's buy everyone at the market, like 100 contracts each, so we push the German Bund, higher. And the problem was that it wasn't just an internal chat between us traders, but it was also a risk department and so on, so they could see. And it was a no-no to say, let's do this, let's do that. It was more like sharing the views, like our analysis. And if you agree, you can open a trade based on that. If you don't, you just ignore it. But he was saying exactly like, let's buy, we have to push the market and blah blah blah. So the risk department, they said like, come on, it's impossible to do it. You cannot write it like that, because it could end up like a manipulation of the market, the Bund market. So he got fired on the spot, like, we don't want you, or a big risk for us, if it happens like once again, and some traders will take it seriously and place market order, it's that size, we could end up with a manipulation. So you have to, you just go. So basically that's how it works on a trading floor. There are big no-nos, and there is heavy manipulation of the market involved, but it happens. So basically the thing is that now when I'm a retail trader, although a professional but from home, trading from my own account, I know like how the firms trade, what they think, and based on that I know when to place an order, when to be aware, like hold on, don't place an order because it could be a trap, and so on. We had a department with the software where we could see the orders of small fishes or regular retail traders, and we could place orders like that. So that's all I wanted to share for now. So thank you, and talk to you.